Are you 40 and thinking, oh, I've missed the wealth train? Let me stop you right there. You haven't missed anything, my dear. In fact, if you start up now from just £500 to £700 a month in just 2 simple ETFs, you could retire with over £1.5 million in the next 20 years. What I'm about to tell you is education. It's not advice. Yes, even if you're just starting from the scratch, this is your moment where your money changes the story. Not because you got lucky, but because you got intentional. That's what I'm going to show you in this video. Starting at 40 doesn't disqualify you. Just means you need precision, not panic. Let's say you invest £250 a month into the VUAG ETF. That's the ETF that has the S&P 500. Historically, it gives around 12% annual returns. Now, another $250 a month into the XLKS ETF. This is tech, which even performance of about 18 to 20% a year. Now, over 20 years, that £500 a month gives you around £900,000 to about £1 million. Now, if you made it about £600 a month that you were investing in this too, you are looking at about £1.2 million in 20 years. £700 a month, about £1.5 million in 20 years. Now, this is not some get rich in 6 weeks play. No, there's no trading stress, just consistent automated investing in the world's biggest companies who already know what they're doing. You are buying into their growth, you're buying into innovation, you're buying into global economy, and that's how you can make sure that your money does the work for you. Over time, this becomes serious wealth, especially if you let compounding and consistent dollar cost averaging take its course, and you are ensuring to put your money in this little by little every single month, starting with the 500 or 600 or 700, depending on how you are. Now, let's break this down a bit more in plain English for you. No jargon, no fluff. Now, the VUAG, this is S&P 500 index fund. What this does is a fancy way of saying that you are investing in the top 500 biggest companies in the US. Think of companies, like Apple, like JP Morgan, like Microsoft, like Coca-Cola. Companies you already know, companies you probably use every day, companies you already love, and they're already doing great things around the world. These ETFs track the US economy. And guess what? The US economy has consistently grown over a whole century. Yes, over 100 years. The VUAG has returned about 12% annually over the last couple of years. That's strong, that's consistent, and that's money that could be in your pocket if you put your money to work in it. Now, let's move on to the tech side of things. XLKS. This is a tech-focused ETF, which means that your money is going into companies that are building the future of the world. Companies that are into innovation. Think companies like Nvidia, like Adobe, like Salesforce. These are tech giants that are powering AI, powering softwares, more. The fastest growing sector for the past 15 years and more. VGT, for example, or the XLKS, has returned an average of 18 to 20% annually for the last 20 plus years. That's not magic, guys. That's market performance. And you too can tap into that starting with just your next £250. Isn't that great? You don't have to do much. Let your money do the work for you. Now, let's get into the numbers. Let's look at how this actually works. Say you split your monthly investment into half into the VUAG, £250 into VUAG, and another half into the VGT. VUAG gives you about 12%, VGT gives you 18 to 20%. That gives you a blended return of about 15% thereabouts annually, which is realistic based on the historical data that's been available for these 2 ETFs. So, £500 a month in 20 years, you are looking at about £1 million in these 2 ETFs. £600 a month, you're looking at about £1.25 million. £700 a month, you're looking at about £1.5 million. Now, even if the market underperforms and the market doesn't do well, gives you maybe an average of about 12% returns instead, you will still easily cross £700,000 or £900,000 by retirement just in that 20 years. It's about time in the market, not timing the market. Yeah. Now, probably said this and look, how can I do it? Yes. Let's talk about some real world applications, and here's how you can start based on wherever you are in the world. Really, you can do this for anywhere you are in the world. So far, you can buy. UK investors, you can use trading 212. Yeah, that's an excellent way. You can buy VUAG, that's for the S&P 500, and you can buy the XLKS, which is for tech. You can use your stocks and shares ISA to buy this so that your gains grow tax-free, meaning that you make all this money, these thousands and millions of pounds we're calling tax-free. Now, for people in the US, you can use Vanguard, you can use Fidelity, you can use Robinhood, you can buy the VOO ETF or the VGT ETF, and you can do this inside your Roth IRA and you can get tax benefits, which is great for you, so you don't have to pay taxes on that. And if you're in Africa or Nigeria, other platforms are available like Bamboo, like Chaka. You can also use Vest. You can buy ETFs like the VOO, which gives you the top 500 companies, or the VGT, which is the tech. And you can easily just get all of this. It would help you beat inflation. You'll be investing in dollars. You'll be edging against your local currency devaluation. Very, very important. So no matter where you are starting from, the very important key in all of the message is to start. Automate it, ignore the noise, let the process work. The market can go up, it can go down, but no matter what happens, you will still make your money. That's how I want you to think. So you are not late at 40, guys. You are not late. You are right on time, because now you have what the 25-year-olds don't have. You have stability, likely. You have experience. You have consistent income, likely, because now you've had years of experience in the job market or in your businesses. The truth about entrepreneurs or crypto bros or all of that, they are consistent investors who showed up every single month with their small 50 pounds or 100K or 50K or something they just invested. So forget the FOMO, forget the flashy trends. This is your plan. Pick strong, great ETFs like the two that I've shown you. Invest consistently, likely every month if you can. Let compound interest do what is always done best, which is turning your patience into power. This is about your freedom. It's about you retiring with dignity in 20 years if you want to, and telling your money where it should go, not wondering where it went to. Let's make every single month of that count. If you loved this video, please make sure you subscribe to this channel. Make sure you share this video and make sure you let everyone know that we're talking about ways to build real wealth on Wealth Motley.